The underlying factor of this trend is that in the Dow, for instance, they've never been able to close it back below the T-line. A true reversal will be illustrated by a candlestick sell signal and then a close below the T-line. But one index alone does not make for a trend analysis. However, because you can see everything visually, we can see very quickly that the Dow is still in an uptrend, no selling pressure. However, at the same time, very quickly, we can see there's a bearish engulfing signal in the NASDAQ with stochastics in the overbought area. Today it opened positive, but again, this is a clear illustration that after they opened positive, they traded lower. There was still selling going on. And at the same time, the transportation index is showing that there is great weakness, especially with a doji followed by a gap down through the T-line, and then today it was down another 176 points. When you add all three of those analyses together, there's really no consensus. You've got a uptrending Dow, a flat trading NASDAQ, and a downtrending transportation index. The assessment is there isn't any change of investor sentiment. There's just different sectors that are rotating out of positions and others adding to positions. It is not difficult to analyze what's happening in a trend like Amazon. Got their little J-hook pattern. We're in the next wave. So the assumption is wave 1 and wave 3 should be the same. And because that assumption tells us we should be heading higher, any additional evidence, such as today's positive trading, just kind of confirms what we suspect. On the other hand, we can also identify where the selling started on Tesla. We had a shooting star. The next day they opened at much higher, but you could see the selling had started, continued down to the first support level we'd suspect, which is the T-line. When they traded it higher yet and started trading it down, told us obviously Tesla is back in a downtrend, that if we can see this as a trend channel, now we can kind of assume our next target is somewhere in this area. This is not rocket science. This is merely taking the information built into graphics that the Japanese rice traders identified as how human nature works the same way time after time. When applying the analysis of the candlestick signals and patterns, it puts you in situations where the probabilities of being in the right trade at the right time are dramatically in your favor. IOVA, you can see when it broke out through this level, where the fry pan bottom began, a big fry pan bottom, a rounding bottom that you couldn't trade one way or the other until they broke it out through this level. That's where the enthusiasm steps in. Moving from this level up to this level, up over 45% in a week and a half. Remember, when we're buying signals, we're usually looking for stochastics to be in the oversold area. When we're looking at pattern breakouts, they're usually occurring with stochastics in the overbought area. Just basically looking for patterns where the Japanese rice traders tell us we have a high degree of probability based upon reoccurring human nature, puts us in situations where we're in the right trade at the right time. That'll be it. We'll see you in the chat rooms.